Hi guys, and I hope you're all having a great weekend. And don't forget to look at the charts here. Weekend is not just for you to sit on your chairs and relax. You must always have some time set aside so that you look at the charts, how the price action panned out in the past week. So like I said last week, that every weekly forecast video that I release on Monday is going to be followed up by a weekly review, so that we get to see how the market moved in relation to the forecast that would have done on Monday. So this is going to be a Sunday thing, whereby every weekly video that I release on Monday, every Sunday we'll go back to that video and then have a look on how the price action panned out, whether it's negative or positive. It does not matter, we'll just do the review. So first things first, looking at the dollar index, I expected price to find support around 8989 and 89730, and as you can see, the price action that panned out, we had a good rejection on the 89.8970, but we didn't actually reach our optimum entry of 89730. Now, as a trader, now this is something that you have to develop. As a trader, it's not a case to say that if price does not reach your optimum entry, then you are going to be missing the trade. As a professional institutional trader, you need to understand that yes, the price forecast that we do, they are there to guide you, they are there to help you in determining your entry points. Now if you look on this dollar index H4 chart, see we've got a bullish order block there. See the reaction that happened when price came into that bullish order block. It's this H4 candle here, right? Now look at the reaction from the 50% mean threshold, which was 89.82. the reaction was instant rejection, and then price moved away. Now when price moved away from the H4 bullish order block, this last down close candle here, right, the one that rated the stops below 89730, price showed rejection. So this was a new low of last week. Remember, we're in a bullish weekly order flow. We are looking for prices to move to the upside on dollar index. So with the forecast of last week, 89.89 and 89.730, those were the ideal entries for longs. So now, for instance, let's say you'd have missed this rejection from 89.82, which is just below 89.89, right? Let's say you'd have missed that opportunity to go long. Yet after you've seen this move to the upside, this displacement to the upside, you'd have noted already that okay, price rejected from this order block here, created a new low, then rallied and created a new high. Now this is where you need to have your fibs, right? You've got a new swing point, right? Now once you have noted the low, the swing low, which is here, the starting point of your fib, and the high that has been created after the displacement, right, that is your swing point from swing high to swing low. Look at the reaction at the 70% level. Now this would have been your perfect ideal entry, right? Because by now you'd have known already that okay, price is in discount at this range. We've already seen a rejection from a bullish order block. price rallied, created a new swing point. You place your fibs low to high to determine your retracement levels for entries to the upside. Remember, we are in a bullish weekly order flow on dollar index. We are looking for prices to move higher, and when this happens, see the reaction at the 50, the 70% retracement level, which is our OTE, optimum trade entry. Even if you had entered at the equilibrium point, now your stops would have been below the bullish order block, which price showed displacement from. So the outcome would have been this. This would have been your trade outcome of last week. Now remember, our target was 90.50 and we ultimately reached that target, and then there was a bit of rejection prior to market close. So basically, dollar index panned out perfectly the way we forecasted it, the way we anticipated price action to pan out. That's exactly what dollar index delivered. Now looking at EURUSD, I was expecting price to find resistance around 1.22300. Now that did not happen. Same applies with dollar index. We didn't reach our 89.73, but we did reach the 89.89. Now when we come to EURUSD, 1.22300 was our optimum entry. But be that as it may, we've got this price action here. This is our daily bearish order block. Let me go to the daily chart. You can see here, this is our daily order block, and price traded right through to it and then found resistance here. You see, price found resistance right at the proximal line of our supply zone, and then the rest, boom, was history. Our target of 1.21 was reached, and you can see that high from last week came in on Wednesday, right? The high came in on Wednesday. Let me go to H4. The high came in on Wednesday. That was, what time is this? New York Open. That was the high of the week. Now if you had missed that, this is where you grab your fibs. Price showed displacement from the bearish order block, created a new low. You see how you should develop as a trader. It's not a case to say, oh no, price has already left my entry point, I'll wait for price to come back. No, the opportunities will be there, but you need to know how to grab those opportunities. Now when you see the displacement from the daily bearish order block, and then price moved to the downside, created a new low right here. Now watch what price action does. So this was the high on Wednesday, and that's the low that was created on Thursday. The low that was created on Thursday, you'd have already noted that, right? Meaning Friday, day trading concept. Look, London Open. London Open tested our 62% retracement level, and price tested the daily bearish order block, and then the rest was history. It reached our ultimate target of 121.0. That was the target on EURUSD. A very nice short position that you'd have taken and yielded about 96 pips. Now you got 96 pips on EURUSD. You get 59 pips on dollar index. That's already about 140 pips on two pairs. Now remember, this is by following the proper concept. You are not trading randomly. You see, you're not trading randomly, you're following the concept of price action, institutional order flow. Now coming to pound dollar, we were hoping for price to trade above these two equal highs here at 14200, right? That was our optimum entry to the downside. Now, but when we go to the daily time frame, we also have the same price action as on EURUSD. We've got this daily bearish order block, this right here. Now, this daily bearish order block, if you look at its mean threshold, the 50% mean threshold was coming in at 1.41930. Price traded into the daily bearish order block on numerous occasions last week. Friday, Thursday there was a retracement, Wednesday tested, Tuesday tested, Monday traded into the daily bearish order block. Now remember, Monday we don't usually take positions, but if the setups do appear, we do take the positions. Now you can clearly see the whole of last week price traded into the daily bearish order block. Yes, our entry was set at 1.4200, which was more of a bit of a less risk entry, right? But every time price came to the daily bearish order block, every time we tested the daily bearish order block, let me just zoom in so that you guys can see clearly. So this is Friday, Thursday, Wednesday, Tuesday, Monday. You see, late Monday, New York close, the price was trading inside the daily bearish order block, and there was a rejection of 66 pips. That would have been a good trade to take. Then Wednesday again, you see, price traded into the daily bearish order block. Nice trade all the way into Thursday, 100 pips, and already on the three assets we're already talking in excess of more than 250 pips. Then come Friday, the same setup, you see, the same setup presented itself and traded lower, reaching our goal of 1.40979 two times in the past week. That's in excess of 320 pips from three assets only. We haven't even reviewed EURGBP. We haven't reviewed Aussie dollar, you see, which are the assets that we forecasted last week. So now going to EURGBP, this one was a very good trade for me last week. We had this fair value gap, which I highlighted. If you didn't watch the weekly forecast video, guys, I would advise that you watch it before you watch the review, right? Now we had price trading into the fair value gap from last week. The fair value gap was our entry for short trades. When price traded in here, this was the perfect area for us to trade to the downside. So we got Friday, Thursday, and Wednesday, and then we also have Tuesday. Tuesday price traded right inside the fair value gap and closed it right away. That would have been your entry to the downside, 36 or so pips, right? Come Thursday, the same price action, but this time, can you see what happened? We traded through the fair value gap. Now in cases like this, you see, in cases like this, remember, you are entering your position based on the fair value gap. You're expecting price to find resistance. You need to see price showing a bit of a rejection. Once you see price close above, the moment you see this bearish candle, right, this would have been the trigger for you to short the market, right, for a goal of almost 50 pips. But this drawdown, the drawdown of 16 pips, you see, you'd have had to hold that until London open. See, this is 1800 hours towards New York close, and then tomorrow 11. See, this would have been a good entry. You see the rejection that this candle shows. Let me zoom in. You see the rejection on this candle here, right? This is what you need to see when you're trading, this rejection. So this would have been an entry on London open. This was your shorting opportunity for market to trade to the downside, you see, and the reward was in excess of 50 pips. So that's on EURGBP. So already we're at 400 pips on 4 assets. Now coming to Aussie dollar. Aussie dollar did not reach our entry point. We were expecting price to test the proximal line of our supply, but price did not. It missed the level by 15 or so pips, but it traded into this bearish order block. You see now, guys, this is why I say it's not a case to say you missed the entry. Break down the price action, right? Break it down and then you hunt for your setups. Look where we got rejection, right at the 50% mean threshold of this last up close candle, which is our bearish order block. Just make it perfect there. You see, this was our bearish order block, and price was finding resistance every time it traded into the daily bearish order block. So you can see there was a lot of 60 pips on offer last week on Aussie dollar. So all in all, you can see that last week's weekly focus video turned out to be very fruitful for our trades, and especially on pound USD. Pound USD, if you're in the group, remember Friday, I think around 1:15, Friday around 1:15, I did told you guys that there's a great setup for shorting positions on pound USD, and this came about because of this up close candle here. I was watching this price action when it was panning out, so the entry was here. This was the entry in this candle here. This was your entry to the downside for a total of around 60 pips. That was a very good trade which I took on Friday. So yeah, this is what I wanted to share with you guys on the weekly review. It's gonna be a weekly thing, God permitting. So I hope you have learned a thing or two from the weekly review. Remember, we are just reviewing what the trades from last week turned out to be, and were they fruitful or not. So yeah, that's pretty much about it, and there's nothing more to add, but just that you must always learn to be reactionary to price action. Study the order flow, your premium and discount arrays, your target, your entry target might not be reached because you are focused on it, and then you forget to look at other order flow that might give you great opportunities to trade your asset. So yeah, the weekly mentorship video, I'm going to upload that tomorrow before New York close. As always, we wait for Monday's price action to determine how we're going to trade during the week. So yeah, if you haven't joined the mentorship, just send me an email or send me a Telegram message if you want to join the mentorship. And for those that are in the mentorship, you're going to get the weekly video as soon as I'm done rendering it. That is tomorrow before New York close. And if you're not in the mentorship, the weekly video, you're only going to get it on Wednesday New York close or Thursday London open, and by that time the market would have already moved. So yeah, I urge you guys to join the mentorship and then let's help each other. So yeah, with that guys, I wish you good luck and happy trading. Thank you.